The ultimate reset. What if the US government plans to pay off its debt with Bitcoin? The United States is drowning in debt. $37 trillion and counting as of April 2025. Politicians and economists wring their hands over this colossal IOU, debating painful solutions, draconian spending cuts, massive tax hikes, inflating the dollar to make old debts cheaper, or even default. None of these options are palatable. But what if there's a radical plan B lurking in the shadows? What if Washington's ultimate reset button is Bitcoin? In a scenario straight out of a financial thriller, imagine the US government secretly hoarding cryptocurrency and waiting for the right moment to wipe out the national debt in one fell swoop. Sound far-fetched? Perhaps. Yet the pieces of this speculative puzzle are falling into place. America's $37 trillion dilemma. The national debt has exploded to levels once thought unimaginable. At $37 trillion and rising, it now exceeds the country's annual GDP by a wide margin. Every year, hundreds of billions in interest payments go out, and unfunded liabilities like Social Security and Medicare loom even larger, estimated at over $160 trillion in coming decades. The usual escape routes from such debt are all ugly. 1. Default, an outright refusal to pay, which would destroy U.S. credit and the dollar's credibility. 2. Hyperinflate, print money to pay off bonds in worthless dollars, cheating creditors and punishing savers. 3. Austerity, extreme budget cuts and tax increases, a political suicide mission that would likely spark unrest. For a government that wants to retain power and stability, none of these choices is attractive. Little wonder that trust in the dollar-based system is eroding and policymakers are quietly exploring alternatives. Enter Bitcoin, the maverick asset class that wasn't even on the radar 2 decades ago, now valued in the trillions and rising. Could this digital gold be the ace up Uncle Sam's sleeve? The Bitcoin wildcard. A secret strategic reserve? It's no secret that the US government has accumulated Bitcoin over the years, albeit not by traditional investing but through seizures and forfeitures. When criminals and darknet marketplaces were busted, federal agents ended up holding the confiscated spoils. According to official statements, the government's crypto hoard stood around 200,000 BTC, worth about $17.5 billion in early 2025, from various high-profile cases. These include the takedown of Silk Road in 2013 and the recovery of tens of thousands of bitcoins from hackers and fraudsters. But here's where the plot thickens. What if 200,000 BTC is just the tip of the iceberg? There are whispers in the halls of power and threads on crypto forums suggesting the true number could be far higher. Some speculate that Uncle Sam might have quietly stashed away 500,000 or more BTC through undisclosed operations. And then there's the ultimate wildcard, Satoshi Nakamoto's legendary cash. The creator of Bitcoin is estimated to have mined about 750,000 to 1.1 million BTC in the early days. Those coins have never moved, prompting endless theories. Did Satoshi take the keys to the grave? Or, in the most radical red pill theory, did a government agency uncover Satoshi's identity and obtain that treasure for safekeeping? If the US government indeed holds over 1 million BTC, Whether through secret purchases, seizures, or Satoshi's stash, it possesses an asset of unprecedented potential. But potential means nothing unless unlocked. Which brings us to the next part of this speculative saga: skyrocketing Bitcoin prices. Bitcoin to the moon. Astronomical prices, astronomical payoff. For Bitcoin to erase $37 trillion of debt, it would have to reach astronomical price levels. We're talking figures that sound absurd today, millions of dollars per BTC. Yet, in an extreme scenario, it's not impossible. Consider how this could happen. The US might, and perhaps other nations, quietly accumulate Bitcoin as a strategic reserve. At some point, the government shifts its stance, openly embracing Bitcoin as a reserve asset, perhaps under the guise of modernization or competing with a BRICS currency. This could spark a global FOMO among other countries to buy Bitcoin, driving the price sky high. Alternatively, the Federal Reserve and Treasury could let the dollar inflate aggressively. A falling dollar means a rising Bitcoin price in dollar terms. In a hyperinflationary environment, BTC can reach the multi-million-dollar territory purely in nominal terms. For instance, if one BTC were worth $5 million, a cash of 1 million BTC would be $5 trillion in value. If one BTC reached $37 million, that same cash would be an astounding $37 trillion, theoretically enough to cover the entire U.S. national debt. As Forbes mused, as Bitcoin appreciates, potentially into multi-million-dollar territory, it could offset the national debt in nominal terms. In other words, a hyper-Bitcoinized world could flip the U.S. balance sheet. Assets, Bitcoin holdings, shoot up, while liabilities, debt in devalued dollars, shrink in comparison. Sound crazy? Maybe. But consider that even mainstream U.S. lawmakers have floated ideas along these lines. Senator Cynthia Lummis proposed the U.S. Treasury buy 1 million BTC over 5 years as a strategic reserve, roughly 5% of all Bitcoin. Her idea, echoed by others, is that such a reserve could strengthen America's hand and even allow leveraging Bitcoin's future gains to address the debt. In fact, Lummis claimed that a 1 million Bitcoin reserve, combined with prudent management, might cut the debt in half over 20 years under certain conditions. Our scenario simply asks, why wait 20 years? If Bitcoin's price were deliberately driven to extreme heights through a combination of market dynamics and perhaps a dose of government orchestration. Washington could be sitting on a mountain of new wealth. The stage would be set for the ultimate reset. The ultimate reset, wiping out $37 trillion at a stroke. Imagine a future moment when Bitcoin has hit those stratospheric valuations. The U.S. government finally unveils the hand it's been holding. An announcement is made. America will eliminate its national debt effective immediately. The mechanism? A one-time asset sale or swap using its Bitcoin reserves. Here's how it might play out. The Treasury, in coordination with the Federal Reserve, offers to redeem U.S. bonds using Bitcoin or equivalent value in dollars converted from its Bitcoin holdings. Trillions of dollars of U.S. debt get paid off or bought back. Whether they directly transfer Bitcoin to creditors or sell the Bitcoin for cash to pay them is a technical detail. The end result is the same. The crushing weight of $37 trillion in debt is lifted almost overnight. The consequences of such a move would be earth-shattering. Overnight, the United States would transform from the world's biggest debtor to debt-free. The dollar's value might be chaotic in the short term. After all, such a plan likely involves the dollar weakening first to boost Bitcoin's price. But with no federal debt, the long-term strength of the U.S. Treasury would be solidified. It would indeed be the ultimate rug pull, or as skeptics call it, the greatest pump and dump in financial history. The government would have essentially pumped Bitcoin's value by encouraging global adoption and possibly letting the dollar slide, then dumped those Bitcoin at the peak to clear its obligations. Holders of U.S. debt would get paid off in depreciated dollars or in Bitcoin at a time when its purchasing power is peaking. Meanwhile, anyone holding dollars without Bitcoin would see the value of their paper money eroded. It's a high-stakes gambit, almost unfathomable. But so is a $37 trillion debt with no easy way out. In one audacious maneuver, the slate could be wiped clean. But our speculative story doesn't end there. With the debt gone, the government might have another trick up its sleeve for that excess Bitcoin fortune. America's troubled retirement system. Beyond debt Bitcoin to rescue Social Security? After slaying the national debt dragon, Uncle Sam could turn to the next colossal crisis, Social Security. The program that has provided Americans with a safety net since the 1930s is, by all accounts, barreling toward insolvency. The Social Security Trust Fund is projected to run dry by the mid-2030s, which would force benefit cuts if nothing is done. With tens of millions of baby boomers retiring, Social Security, along with Medicare, is eating up an ever-growing share of the federal budget, nearly 40% of spending as of now. It's a ticking time bomb, politically and financially. Now picture this. After paying off the debt, the U.S. government still holds a massive reserve of Bitcoin, because, in our scenario, they had more than enough to cover $37 trillion. That surplus could be on the order of trillions of dollars in value. Rather than let that wealth sit idle, the government executes a second phase of the master plan, recapitalizing Social Security, and even reimagining it as a crypto-backed, privatized system. How might that work? Here's a speculative outline. The government injects a portion of its Bitcoin reserves into the Social Security Trust Fund, or maybe even a newly created fund, instantly backfilling the shortfall. Suddenly, the program has real assets to pay benefits for decades to come, taking pressure off future taxpayers. Taking it a step further, Congress could pass reforms to privatize part of Social Security. Every American might receive a personal retirement account funded by this Bitcoin windfall, essentially giving citizens a direct stake in the nation's crypto treasure instead of relying on the younger generation's payroll taxes. Retirees would draw from a crypto-backed fund that grows or falls with the markets. This move would transform Social Security from a pay-as-you-go entitlement into something more like a sovereign wealth fund or private pension system. With Bitcoin, and perhaps other digital assets as the foundation, it could herald a new era of retirement planning. Imagine a world where your Social Security is an app on your phone showing a balance of tokenized assets growing over time rather than just a line on a government ledger. A privatized crypto-backed retirement system was unthinkable a generation ago. But in the aftermath of a Bitcoin-enabled debt jubilee, it might be sold to the public as a bold modernization. Politically, it's a clever twist. Use the spoils of Bitcoin not just to erase debt, but to fund the nation's most popular program. And by doing so, win over skeptics who would otherwise never trust crypto. It's a gambit that could secure Americans' retirements in a way that traditional Social Security no longer can, or at least convince them that it does. Critics would rightly ask, what about volatility? Bitcoin prices can swing wildly. Can we base retirees' livelihood on that? The government might counter that with such a large fund and long-term horizon. The overall growth potential of Bitcoin and blockchain investments outweighs the short-term swings. They could also diversify the crypto reserve into more stable assets or even tokenized indexes. The key point is, once you have a huge pot of money from Bitcoin gains, you have options, and those options could include fundamentally restructuring one of the pillars of American life. Conclusion. Visionary strategy or ultimate pipe dream? Let's take a step back. Is this scenario likely? Even the most ardent Bitcoin evangelists would admit it sounds like science fiction. The political and economic coordination required would be immense, the risks incalculable. Yet, consider the trajectory we're on. A debt spiral with no obvious escape, a rapidly evolving crypto market, and increasing signals that the old financial order is teetering. Sometimes reality catches up with speculation in surprising ways. A decade ago, who would have believed the US government would seriously consider holding Bitcoin at all? Now it's a matter of public record that it does, and lawmakers are drafting legislation to expand that reserve. Major financial institutions and even BlackRock are embracing Bitcoin, something once deemed heresy. The Overton window of monetary policy is shifting. In a crisis, the unthinkable can become the inevitable. From a red pill perspective, one might argue that the pieces are being quietly put in place. The strategic reserves, the regulatory frameworks, the gradual normalization of crypto. If a tipping point arrives, say, a loss of confidence in the dollar or a geopolitical catalyst, the US could indeed pull the trigger on an ultimate reset strategy like the one we've outlined. It would be a one-time massive rebalancing of accounts, essentially converting the nation's digital wealth into a clean slate and a new social contract with its citizens. A debt-free government and funded private retirements. Of course, this could also go horribly wrong. Misjudge the timing or execution, and you could get the worst of all worlds. A crashed currency, a crashed crypto market, and a populace that loses faith in both. It's a high-wire act with no safety net. For that reason alone, many will dismiss this idea as a pipe dream or internet conspiracy theory. Yet, as we peer into the uncertain future, one thing is clear. The status quo cannot hold indefinitely. $37 trillion in debt is a problem that demands a bold solution, perhaps even an unconventional one. Whether Bitcoin is that solution or part of it remains to be seen. But the mere fact that we can entertain this scenario, that Bitcoin might save Uncle Sam's bacon and reinvent Social Security to boot, speaks to the extraordinary times we live in. In the end, today's speculation could be tomorrow's headline. The ultimate reset may never happen exactly as described, but thinking about it forces us to question our assumptions about money, debt, and the true power of cryptocurrency in geopolitics. As the saying goes, 1,000,000 to 1, chances crop up 9 times out of 10. If that holds true, the idea of paying off government debt with Bitcoin might just be crazy enough to work, or at least crazy enough that someone in Washington has considered it.